Slideshow from the beginning. Hooray!
It's done.
Apologies for that. I still use paper quite a lot. So thank you very much for that, Fabio. Yes, great passion. Being an accountant and not being Italian, I think you'll see my passion from a slightly different angle. So good morning. My name is Alan Ogden. I'm a chartered and certified accountant and registered auditor, and have worked in accountancy practice for over 40 years. Although we're qualified to carry out statutory audits, the main focus of the company is to advise small and start-up businesses on their tax and compliance issues. Jasmine will be dealing with the tax saving tips later on today in her presentation, so although I may touch on the subject, I'll be concentrating mainly on those matters that you need to consider and address in the early stages of setting up a new business. So objectives, that's your real starting point, and I think Fabio really hit on this straight away. If you're comfortable with the salary that you're getting, don't set up a business. Setting up a new business is very time consuming. It has great rewards for the right people, but it can be very stressful for the wrong people. There's lots of different objectives though. There are some people who set up a business just as a hobby on the side of their normal work, and there are those who will become heavily reliant on the income from the new business. If you're going to be heavily reliant on the business, then the risk of getting it wrong is obviously far greater, and you have to take a lot more care in the initial assumptions and assessments. So what do you need to look at? You need to carry out some research of the market and all the associated costs and your potential income. How difficult will it be to get the business off the ground? Are there any barriers to getting it started? Do you have to become a member of a trade organisation or have certain qualifications? How aggressive are the competition going to be? What level of investment will you require in terms of marketing, equipment, stocks, etc.? There's a lot to think about before you even start to think about the business itself, really. It's very important to your success that you are honest at this stage, and you should be willing to pull out if the probability of success appears slim. It's better to change tack at this stage than to plough on and find yourself in the mire with dwindling resources further down the line. Having said that, get it right and the rewards are tremendous. So first thing to do, really, I've headed this slide pricing. It's really look at the financial aspects just to make sure that it is a goer. Financial planning can range from a few quick fact packet calculations to a fully detailed proposal containing profit forecasts, budgeted cash flows, and risk and analysis profiles. However detailed you plan, you should at least put together some figures that show how you might achieve the level that you need to carry on your standard of living, or the standard of living that you personally require. And you also need to assess how changes in the conditions might affect that. So there's two fundamental things that you need to look at. Firstly, you need to be able to establish what price to sell your product, or if you're a service, your time. When you're calculating that, you definitely need to include in it a profit element, and the profit element includes two items. There is the extra that you want out of the business to compensate you for the extra risks and the extra time that you are going to take setting up the business. The other element, and it's an element that people forget, and that is, if you want to grow this business, and there doesn't seem a lot of point in having a business if you're not intending growing it, you need to have extra set aside to reinvest and grow that business. So your profit has two elements. So when you're working out the prices, you need to get all the costs, don't forget the tax as well, all the costs plus this profit element. You also need to know roughly how many sales you're going to make, because your price is basically the minimum price. The price is basically that profit and cost divided by the number of sales you're going to make, and that in itself is a problem. It's very good in theory, but in practice, establishing how many sales you're going to make without having a massive marketing budget can be very, very difficult. An alternative approach is to just look at competitors who are selling the same sort of products, look at what sort of prices they are selling them for, and then look at your costs and see where you would be if you adopted a similar pricing structure. And then just flex your prices based on that. If you're finding that to get your sort of profit, you might have to have higher pricing, then you're going to have to look at some way of differentiating your product from those competitors. As long as you think your pricing is going to be in the right sort of ballpark area, you also need to look at the risk of not getting those sales. And one of the major areas to look at there is your break even. So this is the point at which you sell just enough products to not make a profit, but also not make a loss. Essentially, that is, just look at your what we call fixed costs. So these are the costs that won't go away if you stop producing, and divide those by the profit that you would make on each individual item. And by profit, I'm really meaning what we call contribution in the trade. So contribution is the sale price minus the costs that vary directly with making that product. So obviously it doesn't include rent, because rent will be there all the time, whether or not you produce something. Whereas if you've got a product that requires 2 screws and 2 bits of metal, the cost of buying those 2 screws and that 2 bits of metal, that's a direct variable cost. So you have to work out that contribution. You can then divide your overheads or fixed costs by that contribution, and that will give you the number of items that you have to sell to not make a loss. Now, if that break-even point is too high, then you need to seriously think about whether this is going to be a goer or not. So those are 2 fundamental areas that you need to look at. There are lots of complications. I could do, and I have done, a 3-hour lecture just on pricing and break-even. There are so many elements that cause feedback loops within the calculations. There are so many variables, so many unknowns. You could spend days playing about with the figures, but at least you need to look at those in a conceptual way to get an understanding of what your minimum sales have to be before you rely on somebody else to bring the food home for the kids, and what your potential is for the profits in the future. So get your head around those sort of ideas. If you think, okay, that's fine, that all looks rosy and we can go ahead, then there are a number of ways in which you can set your business up. Fundamentally, there are 2. There is the sole trader and there is the limited company. A partnership is really just 2 or more sole traders working together and sharing the profits. So I lump sole traders and partnerships together as one item, really. So if you're a sole trader or a partnership, anything you do within the business is you personally. And so anything you do wrong within the business, for which you might get sued or for which you might get chased for debts, etc., then those litigants or those creditors can come to you personally for any of your personal assets, maybe your home, your car. Everything you own is potentially at risk. If you trade through a limited company and something goes badly wrong, then on the whole, anybody who is chasing you can only go as far as the funds that are in the limited company. So it adds an extra barrier to your personal security. Limited companies do, however, add administrative costs. They are also a little more cumbersome to operate. You have to be a little bit more careful. You have to stick more strictly to rules and regulations. So they're not right for everybody. And from a tax point of view, usually it is better to start off as a sole trader, run for a few years or run up to a certain point, and then consider switching your business into the limited company at a later stage. At such point, from a tax point of view, the limited company can, to some degree, become a bit of a savings bank, and save you tax in the short term. So, generally speaking, and you're going to hear this a lot throughout this, generally speaking, I would normally advise someone to set up as a sole trader or partnership, not as a limited company. The problem with all this advice is, I'll advise you that now, but the next person through my door may be in a position where limited company is automatically, definitely the best way to go. So you've got to take each individual situation on its merits. There are various other things that you'll hear about. You'll hear about LLPs, CICs, charities. CICs and charities are not really intended for business, they're intended for community or charitable purposes, so I wouldn't get involved too much in those. LLPs are limited liability partnerships, so they sort of combine some of the advantages of a limited company with some of the advantages of a partnership, but they are a little more technical. Fundamentally, you've got sole trader stroke partnerships and you've got limited entities. So once you've chosen which of those to go on to, and I would take advice before you make that decision. Next stage in setting up, if you're going limited, you set your limited company up. If you're sole trader, you've just made the decision. Ideally, well, for a limited company, you must set up a separate bank account. A limited company is a person in its own right. It isn't you, it is another person. It's a virtual person. So when you have a limited company, you have to give that company its own bank account in its own name. And any money that goes into that company is the company's money. You can't just draw it out willy-nilly. So with a limited company, you must have a separate bank account. For a sole trader or partnership, it's highly advisable to have a separate bank account. Although the money belongs to the owners in partnerships and sole traders, the tax issues are made easier if you separate your business transactions from your personal transactions. One way to get a very high accountancy bill at the end of the year is to use your own personal bank account for all your transactions, and then you're just paying for an expensive accountant to subdivide your transactions into what's personal and what's business. So get a separate bank account for the business, and make sure all your business transactions go through that. You obviously have bookkeeping requirements. HMRC require you to record all your sales, and they will tax you on all your sales, unless you can prove that there are allowable expenses to set against those sales. So that's the fundamental starting point. HMRC will tax you on your income, full stop. If you can then prove your expenses are legitimate and can be deducted from it, you can reduce your tax bill. So make sure your bookkeeping is up to scratch. Going forward, in the next 2 years, virtually all small businesses will have to go making tax digital, and will have to send electronic copies of accounting records to HMRC every 3 months. So the days of a manual cash book are going to be dead and buried very, very shortly. Find yourself a decent software. There are 3 major players, all of whom you can see the adverts for on the television. Quite frankly, I think the adverts sum up how good they are. There are lots of much cheaper and, in my opinion, much better, simpler versions out there. So have a good scout round for some software for keeping your accounts. Take advice from an accountant. A lot of accountants will just go and say, well, use this one because that's what we're used to. Well, that's fair enough. But there are plenty of options out there. And they aren't all cloud-based. Some of the best options are not cloud-based, but they all have their advantages and disadvantages. If you're a limited company, of course, you still have the same bookkeeping requirements, but you do have the additional requirement that because your liability is limited, you have to submit accounts to Companies House every year, and these accounts have to be in a relatively specific format and give a true and fair view. So there are filing requirements if you are a limited company over and above those of just submitting your accounts to HMRC for tax purposes. Right, VAT, that's your next decision. VAT, do you have to register? Generally speaking, most new small businesses don't have to register. You would have to register straight away if you expect your sales to exceed 85,000 in the next 30 days only. So if you're in that sort of realm, you're doing very well from day one. You have to register once your last 12 months, and that's a rolling 12 months of sales, have exceeded 85,000, and then you've got 30 days. So you need to keep an eye on your sales month by month to see whether you exceed that limit. Normally you don't have to register straight off, but you might want to. And there are two very common circumstances where you might want to register. The first one is if nearly all your customers or your clients are themselves VAT registered. And the reason for registering in those circumstances are when you register, you have to add 20% VAT onto your sales price. They won't care because when they submit their tax return, their VAT return, they'll be able to claim that VAT back. So if all your customers or clients are VAT registered themselves, it might be in your interest to register because you'll be able to claim back the VAT on your costs. The second time, the second main situation is if the type of goods that you sell are zero rated items, that is, items that are VATable but at 0%, then that means you're adding 0% to your sales, so it doesn't make you less competitive, but you can still claim back the VAT on your purchases. So this might apply to builders of residential houses or bakers, people like that. If you're in a situation where you're selling a mixture of goods, then the decision whether to register or not becomes a lot more complicated. Also, registration does mean that you've got to keep really good books and you've got to submit your VAT return usually every quarter, though sometimes it's every month or sometimes every year, but usually every quarter. Is there anything else? Oh yes, I did mean to, when you are registering, you can obviously just register yourself, but you will come across a variety of options. You can go for cash accounting, normal registration, flat rate registration. You may find that there are margin schemes that you can operate. Sometimes, for example, if you're operating, you're a tour operator, then you are forced to use a particular margin scheme. So registration might appear simple, VAT might appear simple, but there are a lot of nuances involved. So again, this is an area where really I would take advice before you make the decision whether to register, and if you do decide to register, actually following that registration. Then the next situation you have to think about is your income and corporation tax situation. What are the registration requirements? Well, if you're a limited company, if you set up a limited company, registration is quite easy because when you set your limited company up, it has to be done through Companies House, and they have an automatic notification system to HMRC. So probably about a month after setting up your new limited company, HMRC will send you a letter, and that will contain all your corporation tax, tax references, etc., and tell you what your deadlines are, and you're up and running straight away. If you're a sole trader or a partnership, you have to notify HMRC that you have started a business. You have to do that within 6 months of the tax year end in which you start up business. And the tax year end is the 5th of April. We have a novel tax year end over here. So if you start up at any point in the 12 months coming up to the 5th of April, you have until the 5th of October to notify HMRC that you are now self-employed and need to submit a self-assessment tax return. And that tax return would then have to be submitted in the January or before the end of January following that tax year end. Something to watch out for is when you submit that tax return, you have to pay the tax based on your accounts ended in the previous 5th of April, in the year ended 5th of April. But if the tax liability is high enough, and in certain circumstances, you might have to pay an extra 50% on top of that. So that's something that can catch people out from a cash flow point of view. So be prepared on your first or one of your early income tax return submissions to have to pay an extra 50% at the end of January, and also the same again, an extra 50% at the end of the next July. And these two extra 50% count towards as payment towards your next year's tax liability. So that's something to be very aware of, and it's something that people can often not realise. Okay, so those are fundamentally your tax and main regulatory issues. Just very quickly, some other things that you may need to be aware of. Data protection. If you're holding data on individuals, then you may need to register with the Information Commissioner's Office. So that's something to just be aware of. Add it to your list to check up on. If you intend granting credit to the public, you need a consumer credit license. So that's something, again, you need to look up. It's not a problem if you're just taking cash over a till, but if you are sending people bills and then allowing them a time in which to pay, then you need a consumer credit license. If you intend taking on employees, you need to register with HMRC for a pay-as-you-earn scheme, and you need to pay them using software which can link to HMRC's software, and every month or every week when you pay the employees, before you pay them, effectively a copy of their pay slips gets notified to HMRC automatically. And finally, there are lots of different industries that have very specific rules. The best example is the construction industry. Although as a self-employed person you're used to sending out an invoice and getting paid that invoice and then declaring your tax later on, in the construction industry they have what is called the CIS scheme, where you send out your invoices and the person who then pays those invoices has to deduct tax at source on your behalf, pay that over to HMRC, and then you treat that tax as a part payment towards your year-end tax. So that again is another cash flow issue that you might need to look at. So whatever industry you're going into, you just need to do a little bit of research and see if there are any peculiarities in that area. Right, virtually the final screen really. My advice, fundamental advice, appoint an accountant very early on. I would say that, but as I think you've seen, before you even raise your first sales invoice, there are lots of quite important decisions that are very difficult to back out of. You do need to take advice on that, otherwise you'll find yourself up the creek and not being able to paddle backwards. Consult an insurance broker. Insurance is something that you need to put in place. People forget it. Don't. It's quite important, especially if you're relying on the income from your new business. Make sure that if it all goes wrong, you have some cover in place. Consult a lawyer if you need to with respect to contracts. It's very easy to write a contract, and it's very easy to write it in a way that people can get around it. So if you're setting up contracts, then make sure you get somebody with some good knowledge in that area to help you. And it might be worth having a chat with an independent financial advisor. A pound a month saved now towards a pension is worth phenomenal amount when you retire. Don't overlook putting money into a pension scheme. Even if you just set up a notional amount initially, this opens up tax saving advantages later on. So just at least set up a nominal amount going into a pension scheme initially. I'm not a financial advisor, so I can't advise you which to do, but certainly it is something that you ought to consider. I think I might have just one more slide. Oh yes, the man in the pub. The man in the pub will be the greatest provider of advice you'll come across. But just like the tidbits you buy over the counter, treat it with a pinch of salt. Just occasionally, very occasionally, the advice you get from him might be good, but more often than not, although it works for him, it doesn't work for you. By all means, listen to him, but then go and talk to an accountant. Tell him what you've been told, and your accountant will 99% of the time tell you why it doesn't work for you, and on 1% of the time might say, that's a good idea. If we tweak it, we can do that. So, man in the pub, bane of our lives, to be honest. I think that just about that really is.
Alan, you are spot on with time. If you unshare your screen, we'll do the transition with Lee. No, it's tax. Perfect, tax. We are good.
It'll be me next, Gary.
Yep. With Steve.
Yeah, that was amazing.
I apologise, Steve. I missed out the last line, didn't I? Sorry, this is Steve from Nettle and Macclesfield. He'll do all your branding and websites.
That's it.
And SEO. Don't forget SEO. Alan, before you escape, sir, I have to ask you, what lessons have you learned personally about COVID and the advice you've given your businesses that you wrap your arm around?
Look, COVID has really divided everything. There are those who've ended up having no business and relying entirely on government supports and handouts, and there are those who are just absolutely raking it in because of COVID. I mean, accountants are just having to work so many extra hours because although the government have been allowing you extra time to do this and extra time to do that, most of the time it's been for half of the job. So although they've allowed you extra time to pay your VAT return, they didn't allow you any extra time to submit it. So accountants have still had to do all the work that they would normally have to do in a normal situation, despite all these apparent delays and allowances. So I know, fortunately, I haven't had too many problems in that sense, but I do know accountants who have been working 7 days a week, all sorts of hours. And there are lots of businesses out there in a similar situation. There are those who just have nothing. Many of whom have gone out and got driving jobs to tide them over.
Wow.
There are plenty of cars.
Alan, before you escape, before you go, let people know if they've made the good connection with you, how we would get in touch with you.
Best way is they can go on the website. In fact, this is one that Stephen Morton designed. The background there is the opening page, the homepage on my website. And that's just at ogdentownsend.com. Very, very
Brilliant.
simple. www.ogdentownsend.com.
Very kind, Alan.
No, it's a pleasure. Thank you.
Thanks, Alan.
Okay.
Hey, Fab, I leave it to you to
Fantastic
introduce.
information there, Alan. Really appreciate your input on that. That's great. Even I learned something today. So always learning. Superb.
Thank you. All right. Bye.
Fabio, over to you to introduce Steve.
Awesome.
Strap yourselves in.
Two speakers down. Next one up, Steve Morton.